for venture capital, we also need to fundraise. The fund didn't come from nowhere, right? We still have to raise it from other institutions and everything.
Welcome to Biotech Orbit, where we explore the biotech landscape. I'm your host, Victor Lee. Today's guest is Bill Tsai, a senior investment manager at Taiwania Capital and one of Forbes Asia's 30 under 30 in finance and venture capital. In this episode, we talk about what makes a startup ready for institutional investment, how venture capital firms support companies beyond just capital, and the common mistakes biotech founders should avoid. If you're a biotech founder gearing up to raise funds, this conversation offers practical tips and a look into how VCs really think. Hi, Bill.
Hi, Victor.
So first of all, congrats on being selected for Forbes 30 under 30 Asia, right? For investment and finance?
The finance and venture capital category.
Finance and venture capital. That's amazing, man. Yes. And then I want to understand, how did you get there? What's your story?
Oh, yeah. Thank you, Victor, for the congrats. And I will say, without the support of my bosses, my colleagues, and my friends, I will definitely not make it to what I accomplished right now. So kudos to the team. And as for myself, to make myself achieve this current status, I will say there are a couple of things I think I did good is I constantly question the status quo, which means that usually when I find something I'm pretty laid back, I feel like it's time for me to reevaluate the whole status. After questioning the status quo, usually what I do is just trying to go beyond myself to expand my new skill or learning a new perspective. So I think how I transit from an entrepreneur to an venture capital is a good example. For the past 6 and 7 years, I've been both a healthcare entrepreneur and also a healthcare investor. So right after college, I started my own company for around 3 years with 3 other co-founders. 4 of us, we built a medical device using to antibiotic screening. And at that time, we were able to raise pre-Series A funding, but there are no large institutional venture capital invest in us. And that is the time I started thinking about how I can go beyond this quote and beyond this status quo and how I can get the funding from the institutional investors. So that's the time I started to be curious about how VC works. And when the opportunity comes, I was recruited to join Taiwania Capital. And then here I am working at Taiwania Capital for 3.5 years as a senior investment manager right now. Yeah.
And how does your day-to-day look like in Taiwania Capital?
I think that is a question that a lot of people are curious about. Like VC sounds like a mysterious industry, like they don't understand what they're doing. So I think I can break it down into 3 main parts. The first thing is we do new deals and deal sourcing, and also we look into the deals that we are interested in. So which is we'll conduct due diligence on the new cases. So that's the first part, that we evaluate new companies, and for the companies we are interested, we will dive deeper into their data room and look into more scientific evidence and all the things. So the first thing, and make an investment. So and the second thing is we always do post-investment management, which is right after we invest in the company, we will attend their board meetings, review their quarterly financial reports, and also have a constantly dialogue going on with the CEO and the management team, basically to understand how the company's doing and if there need any support from our side. So post-investment management is something that occupies quite a portion of our work as well. And the third part, I think, is an interesting part that maybe not many people understand is for venture capital, we also need to fundraise. The fund didn't come from nowhere, right? We still have to raise it from other institutions and everything. So the fundraise is another big task that occupies my daily life.
That's crazy because when I'm thinking about investors, it's like you guys are the ones with the money.
Yeah. For some people, like their family office, they already have a lot of cash on hands and they are able to make investments. So yes, that exists, and there are professional management company like Taiwania we are, that we raise money and we help grow limited partners, cash, try to make the investment return good.
And the money being raised would be from the government and also from.
Oh yeah, so there are quite a percentage from the government and also quite a lot of them from banks, insurance companies, and there are some family offices they are interested in investing in funds as well. So yeah, these are the limited partners, and which means our how to say, not like sugar daddy. They're where our cash come from.
Right. And now I want to know, when you're doing your due diligence, what do you look for in a scientific team?
Do you mean if the team is a scientific team?
Founding or a technical team, like, yes.
Yes. Oh, I think that is a great question because I think if definitely just beyond their scientific credentials, it will be great to see if they have a track record in management company. Or they have track record in exit the company. That would be ideal. But I know that these kind of founders do not exist in every companies. So I think another good point we will look at is if this CEO or management team, they are willing to step down and searching for a more qualified candidate when they reach a status that beyond their ability.
Well, that's a tough one, actually, for a scientist that became a founder to give up his position.
Yeah, because they're a stage that, companies research and development focused. And at some point, it will become like marketing focused. And as a scientist, usually marketing is something that they are not fully aware of, though they are not that good at compared to other, CEOs being around for quite some time. And, to maximize that scientific asset, actually, it is good for the founders that they can transit from a CEO to maybe like CTO or, chief strategic scientific officers. And, and that someone else take over the company and grow, maximize the asset.
Would you consider that the most common mistake founders make, or is there something else?
Oh yes, there are. I can make a long list, but for us to moving forward, I think I can just mention like maybe 3 mistakes commonly I see for the past 3.5 years. I think first of all, definitely is usually founders, they don't raise enough cash, which is they usually underestimate the money they need to bring the asset to the next milestone. Because every time when company doing fundraise, there are a purpose, right? They want to achieve some milestone, and things always don't go as what we wanted. And they need to reserve a buffer, cash, when things goes down. Just like Trump, they cut off a lot of human resources, FDA and CMS. So when this kind of things happen, it would be better if they reserve a bigger cash to support the operation of the company. And second thing I would say is when they expand their pipeline too much. Sometimes for company, they especially for scientific company, they believe their asset is like a platform technology that can be applied to different indications, and they just want to go all at the same time. And when that happens, the burn rate is very high, and as going back to the first point, their cash wouldn't be enough to deal with the uncertainties happens in the market. So that will be the second thing. I think the third part is usually for founders, they focus too much on their on company itself and also their science part. They didn't stay attuned for the external market. Something like GLP-1 stuff happens. A lot of diabetes assets are if they didn't stay attuned, I think it will be hard. It will be hard for them to raise more capital in the future. So anyway, I think external market trend is also something that founders should be aware of.
Can you summarize those 3 points?
Yeah. So not enough cash, open too many pipelines, increase the burn rates, and didn't stay attuned for the external market trends.
You mentioned earlier that you would prefer to have founders that have already exit, right, from a startup. But most of them, as we know, they are new founders. That's their first time. It's a scientist doing for the first time a pitch, for example, to someone. What would be your advice to them?
I think there are also 3 things that come through my mind right now. I would say First of all, they can do some background check on the investor as well. For example, they can research into the investor's fund life. Just like for Taiwania Capital, Biotech fund, we have 10 years, we have 5 years investment period and 5 years management period. And after that, whole 10 years, our fund ended. So if you are pitching to an investor that they are already at the end stage of the fund life or in the management period, which means they cannot make new investment, then it will be kind of pointless, right? Unless they raise a new fund.
So from the investors' part, they need to have the investment available, the money, the capital available.
Oh, that is true. Yes, exactly. That's what I was referring to, that for founders, they can research in a bit on that investor to see if they are still having dry powder to make new investment.
Okay.
And maybe just observing, for the past few months, if the investors still are making new investments or not. Which means they have a dry powder, right? If you research into it and the new investor haven't made any investment for the past 1.5 years, then yeah, we can be more cautious. Or at the beginning of the conversation, the founders can ask investor can they introduce a bit about their fund and their investment strategy. And usually this investor will love to share. We'll love to share how many funds we have right now and which status we are in and how is the usual ticket size that we are able to provide. So I think that's the first thing that founders can do, research into into investors. And the second thing I think good for the founders when they're doing the first pitch is staying focused. I think there are sometimes that they want to cover too much in the first pitching. I believe the founder have a lot of idea in their mind, or they are doing a lot of different pipelines. But if they do not stay focused, it will be a bit confusing. Because if I am the one listening to a pitch, I will have to deliver the same pitch to my partners. And if you expend too much, not staying focused, it will be a bit hard for me to present to my partners. For them to evaluate. And basically, what I just fill in is staying focused will be important. Yeah. For as a second advice, I think the third part I would say is. Remain authentic when you pitch into the investors. Just don't use too much buzzwords and be authentic on the milestone you are able to achieve. Because even not for me, for my bosses, they have been doing venture capital for more than 20 years. They can tell the milestone makes sense or not.
Yes, and I think you talked about this already a little bit related with the management. But how does Taiwania support startups beyond just capital?
Oh yeah. So I think for Taiwania Capital, especially Bio Team, we take the lead investment to the company for at least 80-85% of our portfolio. So usually with that lead investor role, we will ask for a board seat in the company. So that will be the first thing I think about is we usually serve as one board of director. So we will discuss the strategic planning and we will, provide resources to the company whenever they need it and, participate in all the board meetings and all the decision the company's making. I think that's the first thing.
All right.
And then to go beyond that, you can be just a board of director or participating quarterly board meetings. You can also be very hands-on to support the company's operation, weekly, bi-weekly. And for that case, it really depends on the CEO or the management team. If they want us to be more involved, to provide more of advice, we will love to, and we were able to provide anything they needed. But for some management company, they already have a lot of planning in their head or a lot of resources back in, and that will be the time we can just stay back and see if they're able to achieve what they promise. So it really depends on different management teams' experience and their how they want us to work together.
So what are the red flags that will make you pass a deal, even if the science is good?
Yeah. I think definitely for when we evaluate the company, especially in early stage, the team and the science will be the two main part we look at. And if the science is good, and I think it will be important for us to see if the founders or the management team is open to taking feedback. they have to remain the open-minded to take different perspective. I think that is important not only for them to deal with investors but also deal with partnerships. So I think there are some times that the founders, they become a bit defensive when investors trying to challenge them. But if they put themselves in our shoes, it is our job to challenge their technology, right? We have to ask challenging questions. That is how we were trained. So anyway, I think that ability to stay open-mindedness and take feedback is something very important we look at.
What makes a startup ready for investment from Taiwania Capital?
Oh yeah. Because for Taiwania Capital, we, especially in Bio team, we invest in Biotech and medtech companies, both early stage and late stage across Taiwan and the US. So I feel like it is more useful to talk about what type of company is not ready for them to approach investors like Taiwania. So 3 things. First, if they don't have a structured data room available, that will be very hard for us to pursue further, because usually the deal process look like this. We do the first meeting and I present to my boss, he's interested in or not. If he is, then I will sign an NDA with the company and ask them to open a data room full of like their corporate docs, their scientific evidence, IP portfolio, their regulatory path and financial model and everything like that. So if there are no structures, data room like this, I cannot do further due diligence and make that deal happen. So I think that's the first thing. And the second thing is, if the company haven't laid out a clear milestone or path going forward, that will be hard as well, because because for investor, we are not there to create something with the company. We are there to support you achieve what you already want to go. So if the company is still in the pivot stage, haven't decided which path to go further, that will be hard, because when we make the investment, we have to go through an investment committee. And during that committee, we have to lay out pretty clearly that what the company's future looks like. Right. And if you're pivoting to a totally different path, I'm not sure how many explanation we got to do to the investment committee. And anyway, I think the third part I would say is, if the company is not ready to be more compliant at the governance part, that would be not ready to approach institutional investors, because right after we joining the company, we will be more, we need a company to form a formal board meetings and, quarterly, monthly financial statements. All these are pretty, nitty gritty, I would say, and sometimes a bit noisy for the founders. So if they're not ready to deal with this kind of administration or anyway, more compliant governance, I would say they're not ready.
You were a founder before being an investor, right?
Oh, yeah.
How did that shape your experience in Taiwania?
I think there are 2 things or 2 advantage I have as both a healthcare founder and investor in the field. First of all, I feel like I was able to look into the operations in more detail instead of looking at just their credentials, like what kind of job role they had before. I can be more attuned on how they work with their team and how they taking feedback and how they adapt to different challenges. I think that's operation stuff. Because of that previous operation experience, I can be look into more detailed in that part. That's the first thing. I think a second part is my ability to translate the founders, the company language to my partners, because as I mentioned, usually I'm the first one that the company doing the first meeting with, and it is my job to bring that company as complete as I can back to my my bosses, and also using the language that they understand in a more concise way.
Are there any early signs during due diligence or the pitch that would tell you if a company is more likely to succeed or not?
During the conversation with the company, I would like to observe if if the CEO is willing to delegate some questions to the other co-founders or other vice presidents, supporting their operation. If CEO is taking all the questions by him or herself, which means maybe the company's everything is too centralized. And when the company is small, I think that is totally fine, right? It is how it should work. But at some point for our investment to exit, the company have to be either acquired or they have to go IPO. And if the company scale up to that stage, I think that will beyond that, the centralized kind of management may not work that well anymore. So I think that ability to delegate some work or some, questions and have that trust that his or her co-founders is able to do the work just as good as him or her can do. I think that is important for me.
Next question is very tough.
Okay.
For me, I wouldn't know how to answer this. You are the investor, right? And the startup is struggling. The science is not working. That
Yes.
could be one thing. Or the team is not doing the proper work to get the science to work, if that makes sense.
Yeah.
How could you tell what's happening there?
You're talking about execution and, execution and the team quality, isn't it? So I would say because for different assets, there are some benchmark we can do. That's the first thing. So for example, if the company is developing biologic drugs and we can observe, from lead candidate to IND, if it take longer than 4 or 5 years, then probably there are some execution problem over there. So I think that benchmark is something that we can do, like the industry well-known common practice where we were able to see. So except that, general concept, to observe if the execution is good or not. I think there are also some other part that I also like to look at is how the management team negotiate or work with the regulatory authorities. So I would like to always ask their conversation with the FDA. There are some the question they ask the FDA and also how they take FDA's questions. I think that also demonstrate pretty clear that how experienced the team is, because, in biotech, medtech industry, regulatory is a big hurdle that whether we can advance to the next phase, right? So I think that that conversation usually with the FDA is something that I look into if they have a, good team or not on the execution.
During a pitch or even before a pitch, do founders use animations to educate you guys about their tech?
Oh, definitely. For I think both for biotech companies when they're developing new drugs, when they have to explain their MOA, mechanism of actions, it will be hard. It is super hard, right?
Yeah.
And for you have to, for biotech guys like us, we are very familiar with look at the picture of one receptor work with and the other receptor and all the things like that. But there are some investors, they are like finance background. They have no idea what's going on. And also for medical device company, usually they are like surgery related. And for normal people like non-doctor people like me, how would I understand how the surgery was done? They also use animation to demonstrate how their device how their device were used in the surgery. And that is super helpful for investors. I believe both a finance background or even healthcare background to understand the product more clearly.
I wonder, that's usually seen by the investor before the pitch or in the middle of the pitch?
So I think, the company can send over the video beforehand. But usually what I experience is in the middle. So the company, in the middle of the pitch, that they will have a like 30 seconds, 1 minute video to show how this works. So I think the company can walk through that verbally first, and then the animation is just, as a confirmation if the investor get it correctly or not.
Communicating science has always been my passion, and I run a studio called Med Productions. Honestly, this podcast only exists because Med Productions does. We create science animations from scripting to final video to help biotech teams explain their work to the people they're trying to reach, whether that's investors, healthcare providers, or the general public. You can learn more and get in touch with us at medproductions.media. If you liked the episode, feel free to subscribe. It helps us bring in more great guests and share more biotech stories.